look at the charts here, because the S&P, obviously, it's top of mind, Carter.
Yeah, and obviously at some point one has to have a view, right, and interpret the chart, and that might be prone to bias, but the charts are the starting point always. And this is the sort of the most interesting, I think, trend line. It's one that anyone can draw, and we've all looked at together, which is to say, we know the market peak is 4 January 2022. We market low for now, 13 October 2022. And we had that move above that trend line, which basically drew in Wall Street. Wall Street Journal put new bull market.
New bull market.
Because it was up 20%, and no one knows where that came from. But either way, a lot of people flipping, and then that's what traps are. It's not their fault. I've been in so many traps. I got traps all over. But the point is, that's what makes it so hard. It's an illusion. It's in the desert. You think it's water, and it's not. It's just more sand. And that's what this is, right? Now let's draw the lines a different way. And so maybe we can toggle on those first two, you know, back and forth, back and forth. We've broken trend, the intermediate uptrend line, since the October low. So if we were to put those together, one could say, all right, so what do we do with that? Well, the truth is, you just expand your trend line. So look at another way to draw it. Just expand them. We're still basically grinding. The S&P 500 right now is the exact same level it was essentially 2 years ago, 24, 5, 6 months ago, in fact, more than 24 months. And it's not really getting worse. I mean, and it's not really getting better. It's just sort of stuck, which either is a reason to do nothing or to try to generate alpha by finding individual picks, right?
Yeah, it's interesting. Eric Lancelotti, who's been with us, I think, almost every show since we started. Actually, we met his dad out in, where the hell were we? Miami. But he says history shows the biggest drawdowns follow the biggest bull trap. And that's interesting. I mean, I will tell you, I mean, I can't speak to that specifically. I'll take him at his word, but you know, we saw similar things. You know, we saw it in the Russell 2000, a year or so, maybe longer than that, when you had that false breakout, and you actually talked about it on our show. So it's very puzzling. It's very confusing. But if you try to take the emotion, or if you're successful in taking the emotion out of this equation, a very difficult game becomes a little bit, a tad easier, I would submit, because, you know, there are a lot of cross currents. And to your earlier point, there's something here for everybody today. And, you know, when the VIX get north of 30, as you say, that's when you're inclined to see these moves. So let's continue to take a look at some of the charts you brought, because, you know, it just illustrates, I think, the point you continue to try to make.
Yeah, and Eric is right, because it takes a lot of capital. Money was thrown into the market to move it up to those February 2nd highs. And that capital reverses itself. So, oh my God, it's a trap, which means it becomes an accelerant on the way down, right? Because it's reversing, not to mention people who never sold in the first place then join the fray. But here's the expanded lines, giving you a little more room on a longer term basis. And it just puts in, if you were just given this chart and you didn't know what it was, and this was a software company or a shoe manufacturer or an industrial, there's nothing about that would make you run out and buy it. At least nothing that I see. It would either say do nothing, or hey, maybe we should kind of ride this on the downside and be short. But look at a long term, same thing. And then if we go even longer term, one we looked at before, here is the ultimate sort of, talk about yawn or what have you, pair of twos. This is the entire 2009 to present ascent, and we know that we lived within that well-defined channel, and we blew out through the top in late 2021, and the valuations at that point, or price of sales, price of earnings, were at or near those seen in the dot-com era. And now we're back at the midpoint. And do we walk along the midline and ascend a bit? I think we dip down into the lower half, which is to say, it's still not a very desirable setup.
No, I agree with that. And then you have to take a look at the backdrop and what we're looking. We have obviously some inflation data coming up. We got a Fed meeting. So, and I know you wore this hat in a prior life, so I'm not teeing you up here to try to trick you at all, because I know you're qualified to answer this. But heaven forbid these inflation numbers come in as expected or hotter than expected. And you have a lot of people now saying the Fed by definition has to pause. But if they pause into a continued inflationary period of time, I mean, where are we going to be? So just thoughts on the importance, or the renewed importance, of numbers that I think a lot of people a couple weeks ago were looking at. Now I think everybody's looking at the numbers that are going to come out tomorrow and Wednesday, by the way.
Right. It's ever thus. No one wants to be the person, it's the first person to cut the AT&D dividend. No one wants that on their watch as the chairman. They'll do whatever they have to, borrow more money. No one wants to be take the medicine, be the Paul Volcker. I mean, think if you were to, the debt, think if you just say, well, we're not going to have any cost of living adjustments for Social Security payments. You'll get a huge hue and cry from the entire retired populace. So no one wants to do the hard thing, and that's the human condition. We're all prone to that. And so the Fed is in a hell of a spot, right? Because you stay firm and you risk the hard landing, and you sort of acquiesce and respond to price action, and then you're like, wait a minute, maybe we're just going to set up an even bigger inferno. Not a welcome job. And the truth is, and this is the other thing, and it has to be said, and everyone should know it if they don't, but most do. These are just men and women that put their shoes on the side of the bed every morning like everybody else. They have no more information insight than anybody else. They don't. They do not.